Can I ask you a question? Why are you still paying for that life insurance policy? No, really, look me in the eyes. Are you paying hundreds, maybe thousands of dollars a month because you're afraid? Because a salesperson told you that you need permanent protection for the rest of your life? Listen to me. If you are over the age of 60, the game has changed. The rules you followed when you were 30, with a mortgage and young kids and a spouse depending on every penny of your salary, those rules are gone. You are in a new stage of life, and if you don't wake up and look at what you're doing with your money, you're going to end up insurance poor, while the insurance companies get rich off your fear. We need to talk about whether you actually need life insurance anymore, and if you do, what kind is a must and what kind is a mistake. Here is the fundamental problem. Most people over 60 are holding on to policies they no longer need, or they're being sold whole life, universal life, or variable life policies that are disguised as investments. I have said it a million times, and I will say it again. Life insurance is not an investment. It is protection against a loss of income. Let's look at the fear. I know what you're thinking. You're thinking, Susie, I don't want to leave my kids with nothing, or I don't want my spouse to struggle to pay for my funeral. That fear is real, but you have to be smart. If you have followed the path, if you have saved in your 401k, if your mortgage is paid off or close to it, if your children are grown and independent, who exactly are you protecting? If you die tomorrow and you have $500,000 in retirement accounts and a house that is paid for, your beneficiaries aren't going to be destitute. They're going to be just fine. In that case, paying for a massive life insurance policy is like buying a giant umbrella when you're already standing inside a dry house. It's a waste. Now, let's get into the what kind, because this is where people get burned. There are two main camps, term and permanent. Term life insurance is exactly what it sounds like. It's for a term, 10, 15, 20 years. It is pure protection. It's cheap, it's simple, and it does one thing. It pays out if you die during that term. For most of you, if you still have a specific need, maybe a small mortgage left or a spouse who hasn't hit Social Security age yet, a simple 10-year term policy is all you should ever touch. But then there is the permanent stuff, whole life, universal life. The agents love these because the commissions are huge. They tell you, it builds cash value. You can borrow against it. It's an asset. Stop it. Just stop it right now. The cash value in those policies grows at a snail's pace. The fees are astronomical. If you took the difference between a cheap term premium and that expensive whole life premium and just put it into a high-yield savings account or a Vanguard total stock market index fund, you would have far more money in the long run. And guess what? When you die, the insurance company usually keeps the cash value and only pays out the face value of the policy. Does that sound like a good deal to you? No, it's nuts. So, how do you know if you're the exception? There are only 3 reasons, why you should even consider life insurance after 60. Number 1, you have a child or a dependent with special needs who will require care for the rest of their life. In that specific case, yes, you need a permanent policy to ensure they are funded long after you're gone. Number 2, your estate is so large, we are talking millions and millions, that your heirs will be hit with massive estate taxes and they need the insurance payout to pay the government without selling off the family business or the farm. For 99% of people watching this, that isn't you. Number 3, you have absolutely zero savings and you want a very small final expense or burial policy, maybe $10,000 or $15,000, so your family isn't hit with funeral costs. But even then, I'd rather see you save that money in a payable on death account at your local bank. Here is your actionable takeaway. I want you to go get your life insurance policy right now. Look at the declaration page. How much are you paying? Is it term or is it whole life? If it's a whole life policy and you have $50,000 in cash value but you're struggling to pay the $300 a month premium on your fixed income, listen to me, you might be better off surrendering that policy, taking the $50,000 cash and putting it into your emergency fund. That money is yours. Why let the insurance company sit on it? If you are healthy and you realize you still need some protection for the next few years because your spouse isn't fully funded yet, look into a new 10-year term policy. But do not let a salesperson talk you into a hybrid policy or something with bells and whistles you don't understand. You have worked too hard for your money to let it leak out of your pockets in your 60s. You need to be strong, you need to be smart, and you need to be secure. If you don't have a need for the insurance, you don't have a reason to own the insurance. People ask me, Susie, isn't it better to have it and not need it?
No.
Not if it's costing you your quality of life today. Not if it's the difference between you taking a vacation or being able to afford your prescriptions. Check your beneficiaries while you're at it. Make sure they are up to date. But most importantly, ask yourself, am I self-insured? If your assets are enough to cover your debts and your spouse's needs, then you are the master of your financial destiny, and you can tell that insurance agent no. Thank you. Be brave with your choices. Don't let what-ifs rob you of your retirement. You deserve to keep every cent of your hard-earned cash. With that said, thanks for watching, and until next time.